Is the stock market a grand casino, a place of chaotic chance where fortunes are won and lost on a roll of the dice? Or is it a complex ecosystem with its own language, its own seasons, and its own rules of nature? Here at Alpha Index, we believe it's the second. And like any foreign land, to navigate it successfully, you first need to learn the language. Forget the hype, forget the get-rich-quick schemes. Today, we're giving you the dictionary, the Rosetta Stone for the world of investing. This isn't just a list of words. This is a framework for thinking, a new lens through which to see the flow of money in the world. So grab a notebook and let's begin. First, what are we even talking about? At the heart of it all is the asset. An asset isn't just money. It's anything you control that holds economic value, a piece of a future promise. It could be a stock, a bond, or even the gold in a vault. Sometimes assets are raw, fundamental things. We call these a commodity. Think of the essentials of civilization: the oil powering our cars, the wheat in our bread, the gold in our technology. They are the Earth's raw value, interchangeable and universal. Now, the most common way to invest is by going long on a company's stock. This is the classic story. You believe in a company's vision, its future. You buy its stock with the philosophical bet that its value will rise. You buy low with the hope to one day sell high. The profit you make from this journey, that's your yield, or your ROI, return on investment. It's the fruit your money has grown. So you found a company. How do you know if the price is right? This is where we become detectives. First, you might look at the P/E ratio, the price to earnings ratio. Think of it like this. How many dollars are you willing to pay for $1 of the company's current profit? A high P/E might suggest investors expect big growth. A low P/E might mean it's a bargain, or that the company has problems. It's a powerful clue, but never the whole story. Why? Because past earnings don't guarantee future ones. So we have to dig deeper. What is the company actually worth? We can look at its market cap, which is the total market value of all its shares. It's the price the market has collectively decided the company is worth right now. But there are other ways to measure worth. There's the book value, what you'd get if the company sold everything it owns and paid off every single debt. It's the on-paper value. Then there's the intrinsic value. This is more philosophical. It's what the company is truly worth, based on its future potential, its leadership, its place in the world. It's an estimate, an art as much as a science. Value investors love to compare the price to the book value with the P/B ratio. They're looking for hidden gems the market has overlooked. They analyze the company's financial selfie, its balance sheet, which lists all its assets and all its liabilities, everything it owns and everything it owes. Okay, let's zoom out from a single company to the whole market. How do we measure the performance of this vast ecosystem? With an index. An index is like a market's report card. The S&P 500, for example, tracks the 500 largest US companies, giving us a snapshot of the health of the entire economy. You can invest in these indexes through things like an index fund or an ETF, exchange-traded fund. Think of them as baskets containing tiny pieces of all the companies in an index. It's a way to diversify, to bet on the forest instead of a single tree. Many people use these tools to save for the long term in an IRA, an individual retirement account, a special account that gives you tax benefits to help you build your future. It's a powerful tool because it helps you weather one of the silent wealth killers, inflation. Inflation is the ghost in the machine, slowly making your money less powerful over time. Investing is the primary way we fight back. Now that you know the pieces and the playing field, how do you play the game? This is where your personal philosophy comes in. Are you a value investor? You're a treasure hunter, looking for stocks trading for less than their intrinsic or book value. You believe the market gets emotional and you can profit from its irrationality. Or are you a growth investor? You're a futurist, betting on young, innovative companies you believe will grow faster than anyone expects. It's higher risk, but the potential rewards are massive. To make these decisions, you'll need a method. Will you use fundamental analysis, studying the company itself, its leadership, its debt, its place in the industry like a biographer? Or will you use technical analysis, studying charts and price movements, believing that market psychology leaves predictable patterns? Some people reject all of this. They believe in the efficient market hypothesis, the idea that all known information is already baked into a stock's price, making it impossible to consistently beat the market. These people often stick to index funds, choosing to ride the wave of the market itself. When you're ready to buy, you'll encounter the bid and the ask. The bid is the highest price a buyer is willing to pay. The ask is the lowest price a seller is willing to accept. The tiny gap between them is the bid-ask spread. Your trade happens when they meet. Now, a word of caution. The path to wealth is littered with shortcuts that are actually cliffs. You'll hear about penny stocks shares under 5. They seem cheap, but they're often highly volatile and easily manipulated. You'll hear about leverage using borrowed money to invest. It can amplify your gains, but it can also amplify your losses to catastrophic levels. It's like strapping a rocket to your back. You'll go fast, but you might not control where you land. Then there are complex tools like futures and options. These are contracts that bet on the future price of an asset. They are incredibly powerful tools for hedging risk or making speculative bets, but they are not for beginners. And finally, never, ever engage in insider trading. This is using non-public information to get an edge. It's not just unethical, it's illegal. So, after all that complexity, what is the most powerful force in this entire universe? It's not day trading, it's not some secret strategy from a hedge fund. It's compound interest. It's the interest you earn on your original money and on the interest you've already earned. It's a slow, quiet process that, over decades, creates an unstoppable avalanche of growth. Albert Einstein supposedly called it the eighth wonder of the world. You can harness this power with strategies like dollar-cost averaging. This simply means investing a fixed amount of money at regular intervals, no matter what the market is doing. This removes emotion from the equation and smooths out your purchase price over time. It's not about timing the market. It's about time in the market. It's about patience. It's about understanding that you're not just buying a ticker symbol on a screen. You're buying a share of human ingenuity and future progress. The language of money isn't just for Wall Street. It's the language of how our world is built, of value, and of our own future. By understanding these terms, you've moved from being a passenger to being a potential pilot of your own financial destiny. The name of this channel is Alpha Index. Alpha is the pursuit of beating the market. Index is the wisdom of becoming the market. By understanding this language, you now have the power to choose your path. Host. If this video gave you a new lens to look through, help us spread this knowledge. Hit the like button, share it with someone who's just starting their journey, and be sure to subscribe to Alpha Index for more deep dives into the world of investing. Click that bell so you don't miss our next video. Until then, keep learning and stay disciplined.